Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Market5. I'm your co-host Joel L. Connon, along with Brianna Valesky, and we have Scott Red Dog Redler on the line. He's chief strategist at T3 Live and T3 Trading Group. Good morning, Scott.
Good morning, guys. How you feeling today?
We're doing good. First question here is just kind of general question about like your preparation for the markets. I know you do a lot of technical work for like a Monday trading. Do you do your homework over the weekend on Sunday night, and then come in Monday with the game plan, or with the way the markets move now with the S&P futures? Do you wait till Monday morning to do all that work? Because I had a couple areas in the S&Ps where I definitely wanted to buy through, as a breakout Thursday and Friday's high. And now, okay, do I wait for it to pull back there? Old resistance, new support. Just tell us a little bit about your preparation.
Well, I'm up every day around 4:45. That's what time the alarm goes off. And if you follow me on Twitter, you could probably start seeing some tweets around 5 o'clock, 5:15, and that's when I look overseas to see what's going on because Europe's been a good leading indicator. Obviously, we haven't been as strong as them whatsoever, but when they're up, typically our futures are somewhat in line with them. When they're down, we're down a hell of a lot more. And recently, Asia's just been a real strong spot. Starting about 2 weeks ago. They had a really nice breakout. So I tend to do a lot of my work because I'm an early bird and I get up in the morning. Like you said, things change overnight. And, this weekend, you want to spend the weekend with your family. I had soccer, basketball, triathlon racing. I tend to, not do any of my work until a little bit Sunday night. But, I do it early in the morning. That's when I write my note. I write a note which gives me my market prep every day where I go through about 25, 30 stocks and I write down the quick technical picture on it with some support, resistance, and areas that could be potential for buying. And I do that between 6:30 and 7:30, so it could be as real time as possible. Because you could put it together a whole note the night before, thinking, I think last night around 8 o'clock the Dow futures were down 25 points, and oh, good, maybe I could buy versus 2045 or 2050, where we held support last week in the S&P or SPX. Now today you have to figure out whether or not we could hold above Thursday's high of 2067, reclaim the 50 day, and then maybe, where we can go to before there's a little bit of a rubber match between the bulls and bears as far as, rejection or reclaiming points.
Okay, I'm going to start you out with a tough question. Biotech, the bubble. Is the bubble been burst in biotech?
I feel at this point that it's just talk. There's been great trades. If you remember the Biogen news when that Friday the news came out on Regeneron and the IBBs freaking took off and had the giddy trade where every 5 minutes on CNBC they were talking about the bios, and it was at 370. That was a good spot, to sell and take some strength. And I think some traders in my office tried to be short that, or you could have waited for the IBBs to break the 8-day. Look at the 8-day moving average on the IBBs. We were up above that since February. You can go back or early February, you can go back to almost 2 months. So when a trend changes, especially in momentum, means you change fast. So some people might have been shorting it for a trade below that 355 area. And then, if you recall, if you follow me on Twitter, I posted a chart on Wednesday saying, from 370 down to below 340, the 50 days around 333. If you're short, look to cover around 333 to 335 and maybe get long. And it came off those lows. Friday had followed through above 340. Today, the IBBs are holding, we're up about 4 or 5 points into 352. So I think the question is it a bubble or who's in control here? Yeah, at this point, it's been a very, very strong trend, and people who've been trying to short this bubble trend for a year or two are probably out of business. For now, what I would do is I would write down 355-ish. That's where it broke down from. So, that would be a likely spot that, if you bought the dip at the 50-day on day 3, probably I would say even trim a little bit before then, the open around, I think it's 351. But if you want to re-short and test an area, I think if the bears want to remain in control, which they've had only for about the last week, they don't want the bulls to reclaim 355 to 357 in the IBB, because then that would take away the control of that huge Wednesday wide range bar and then put it back into a range where it could just digest for a few weeks and then, be back in vogue because you see deals in pharma every day. There's so much exciting things going on, and it's probably been one of the few trends with momentum in individual names than most other sectors out there. So I think the next session or so is going to be real key, and I would think traders should write down, that 355 area and not try and be perfect there.
And actually, when I was asking you that question, I was taking a look at this, and I know it's not a true fib number, but I'm a big fan of 50% retracements. And lo and behold, the 50% retracement from the all-time high at 74.97 down to 33.78 comes in at 54.50, and we're only a couple bucks away from there. So, it could pose as a resistance point, but gets there and holds there a couple days. I think biotech could be back up at new all-time highs. But that's a great level, folks. 355 from Scott Redler in IBB. All right, here's a question for you, and I know I don't always get it right, but do we have a potential red dog reversal here in Tesla?
Well, was Tesla downgraded this morning? By the way,
On Friday, it was downgraded by CSLA, I think. CLSA, yeah, they changed it. And I'm looking at my trusty Benzinga Pro here. I do not see anything on a downgrade. It was downgraded on Friday, though. Took out the low of the move at 185, but man, we closed back up there. What's your thought on Tesla?
I still think it's broken. I really only like this name when it's above the 8 and the 21 day, and it's showing power, and it has the shorts tracked, and that hasn't been the case since the summer, almost when it broke, in late August, September, when it lost that 270, and it's been just trapped ever since. I think some traders, that I was watching, or on my VTF, they were trying to press Tesla below 185, 188, because that's been such a key level, but it just came in from 205 like not even a week ago. So at this point, it's not a clear red dog reversal. It's kind of close. I still think it's broken. With lower oil and I think that the whole craze of Tesla, with the coolness of it, that already happened. Now it really needs to be widely accepted and start having real demand there versus just like your fifth car or fourth car in the garage. So at this point, I still think it's somewhat broken. If it were to reclaim and break above this descending channel on heavy volume, maybe it'll be after earnings. I think people are really expecting a real bad earnings report. With a lot of the reports out of China. So if on the earnings report it's bad and it doesn't go down, it's priced in, then perhaps a move over the descending channel and above these moving averages, which keep moving lower, will start a new move. But we're not going to know that until we get a little bit closer. But for right now, traders could trade versus 181.40. And if they're looking at short strength, which has been a little easier than pressing into weakness, that comes in around 192 to 194. That's some resistance that I'll probably have some problem with before earnings.
Okay, let's move on to some of the rumor stocks here. And I know you like to do your homework and trade stocks that you have your setups in, but what a move in Intel on Friday. Rumors that they're taking over ALT, and I can see how if I was an active trader in Intel, I could see how you could get kind of lulled into shorting this thing when it makes that kind of move, because I don't even know how many standard deviations it moved out. Now you really are not hearing anything on this. What are your thoughts on Intel and also ALTR?
I was at my desk on Friday when the news came out, and I looked at ALTR, it was up a lot, and then I saw Intel up 6-7%. I'm like, usually the company taking over the other one, it doesn't get such a boost. So I thank goodness I didn't see it at first. So I started fading it a little bit into like 32, I think, when it was like 350, and I kind of stayed with it. And then the last few minutes of the day, it pulled back, and I got out of that trade flat. But some guys who started too early, didn't take it. And you can get squeezed the same way even in an Intel. I think the group's been broken under pressure recently, just like the BIOS the past week or two. But, it came from, 37, 38 all the way down into the 20s. I would think today or tomorrow, look at Intel's, if you want to be an Intel, it should hold somewhere around 30, 80, 31 if it's going to show some commitment to that big wide range spike Friday. I think the better play, is looking, maybe not Altera because it had such a big move already, but some of those other peripheral ones, maybe Broadcom, and a few others because, there's not going to be too many left of these So, I think it's good to see that kind of stuff in the market. It reacted well, but just because you think something shouldn't happen, you got to be careful, because I think some guys, all of a sudden on a Sleepy Friday started shorting Intel because it was up 3 or 4%. It went up 7, and they probably lost money when they didn't have to because they just started to throw things out there.
Okay, let's move on to Apple. Really been in a pretty well-defined trading range here. I know you've been out of it for a little bit, looking for a place for a re-entry on the long side. You getting tempted here at the 120? Well, it's trading up 79 cents now. Any potential setups in Apple AAPL?
I feel like if you traded short term, you've had to be pretty quick and nimble. Right? Every time that I've tried to, play for a reversal the following day, it doesn't get anything. Like I did play for on Thursday, that was a decent reversal. If you remember, the futures were down a lot. I bought it from red to green, at the 50-day, and then I was like, okay, I'm gonna, see how this acts on Friday. Maybe they pin it at 125, and then it was just weak, so I actually got out of it again. So I don't come in today long Apple. It's up 75 cents or so. So we'll see with the window dressing that could be happening, between today and Tuesday. It's been a strong stock. Maybe if it holds today's gap in the first 30 minutes, I'll trade versus that gap. And then it really needs to get back above the 8 and 21 day and then take out this descending channel, which keeps moving lower. So until it really breaks and closes above 126 now, I think it is, with authority, it's going to be in this choppy range. And if for some reason it breaks the 50-day, you could see some more pressure before earnings, and then the next level would be at 119. So if you're an investor in Apple, you have nothing to worry about. This is just the consolidation phase. If you're a trader and you're trying to be cute, you got to do maybe long versus 122, and if you get some momentum, it's got to close back above that 126 area.
Okay, let's move on to Facebook here. We got that move up over 86, got caught at a whole number, 86.07. We pulled back to 82 and change last week. Did they shake you out of any of your shares, or you're still holding long and strong in Facebook?
I think when we spoke 2 weeks ago, I was, buying a tier one around 77, half 78, and then I was waiting for that good breakout above 82-ish, and then we got it. And then I actually sold into like the 84 area, and I missed that last little, bar up to 86 because, again, day 4 or 5, I'm a seller, not a buyer. But, I do like the fact that I retested 82, and I did get long again, and I come in today long. So I think if there's any names that still have some momentum and a chance of making new highs, I think this is one of them. It retested 82 and held. So if you want to be long versus, just say 82, you could do that. You have a nice defined risk, and then if it could start, getting back to 85-ish and negating that big wide range bar, I do think that at some point it takes out 86. I'm also in Twitter. I think Twitter, we talked about that breakout there. You had a good buy above 49, and then it took out 50, and you sold some strength above 51. That little pullback, that downgrade didn't hurt too much, and then held the 49s again. So I think they saved this one by Thursday, Friday, holding above 50, and at this point, I think, you could still be long Twitter versus 49.25, and with a little bit more time, there actually could even be some momentum above 51.87. So I'm still in the Paul spreader. I'm in the stock, and it's been a great vehicle for 2015.
Yeah, they kind of caught people on that one because you had that strong move through the $50 level, went to 51.79, and then you did have that downgrade on Thursday, and it tested that level and then gave it back. But I see where you're liking that 49.25 level. You had a low on Wednesday at 49.31, then another low on Thursday at 49.40, well above that. So that should be a good level to keep an eye on. Then, of course, on the upside, above 52, I don't see a lot until 55 and change. Also, I just want to get your take on Alibaba here. Our last guest made a real good comment, and he just said, where do you see a reversal of the trend here? Big move off the IPO. It's just kind of withered away. Bad earnings. Some problems with the company that really have been talked about but not truly identified here. Is this still in a trading range, or is it piquing your interest here? Alibaba at 85.
I think at 85, it looks a little better. I don't think it should control your trading day. Like a lot of traders, unfortunately, in my at my firm, they over focus on it. Instead, it should be like one of the 6, 7 names you focus on. I would say if you want to be long verse 83, 83-ish. If you see that those 3-4 days it held above at 83, and then if it wants to really get momentum and change, which we haven't seen in a while, I guess above 87. If it can get an 87 close, above that with heavy volume, maybe some shorts will cover, and then people will feel compelled they have to get back into it. Right now, it's been so lethargic that I think ever since that 119.45 peak, no one's been in a rush, and it's been nothing but really bad news. So at this point, if you got out then or you got stopped out or sold some strength, maybe, again, verse 83, and it can get some momentum above 87. I was really focused on it when the lockup happened, and there was a quick trade there, but it didn't really amount to much. But now that some of that selling might be out of the way and the fast money's not overly focused on it, it could have a sneaky move. So it's definitely worth keeping on the radar. It didn't act horrible last week when the market pulled in, so I guess that's a start not to act horrible. So yeah, again, it could be on your radar, on your trading plan, but don't over focus on it. Maybe have tier 1 verse 83, and then above 87, you add a little bit to it, and then maybe that gap area that is unfilled from earnings is around 191. Maybe it tries to get near that for the next report.
Two good points there. One, just don't trade something just because it's a stock you like to follow. Trade it for just the sake of trading it. And as Scott points out, when there's a catalyst or something out there, it piques his interest and his technicals probably kick into play. Before I let you go, got to go a little macro on you here. Morning note, pretty dresses, end of the quarter, Good Friday, unemployment data being released. Q1 earnings starting soon here. Just give us a quick macro outlook.
I think macro-wise, the U.S. trade has been boring. It's year 6 of a big bull run. It is what it is, unfortunately. The action's been better in Europe. It's been better in Asia, but you can play some of the ETFs for those countries. Here, we've been in this range. It's been a pretty lethargic, choppy range where you have the lower end, 1990, upper end, now 2120, and we just held the middle end. We're trying to figure out some answers to the questions. How did the strong dollar really affect earnings coming in April? But I think some people have ratcheted down their expectations, which is probably good. And then also the Fed. What's happening here? Are they, naturalization isn't real naturalization. I think Bernanke started a blog today talking about how long-term rates are still going to be lower. So I think we're just the U.S. markets are tired. So when that's the case, you have to be much more specific. You can't overtrade it. And once we get a little clarity, I think on liftoff, which hopefully I think the market wants good news to be good news. Just do it even ceremonial. Raise the rates once and then don't do it again. And I think the highs of the year aren't in, but I wouldn't be jumping out of your seat just to be involved when the action's slow. And we could take a few more weeks for more clarity, and we'll get some of that as some of the earnings and I guess the forward-looking statements come out.
Scott Redler, Chief Strategist at T3 Live and T3 Trading Group, joins us every Monday to talk about the markets and the setups for the day. Scott, thanks a lot for coming on. Looking forward to speaking to you again.
Sounds great. Thanks for having me.